So today we'll be talking about the future of finance, how you personally can unlock the future of finance, right? So throughout this presentation, I'll tell you how our view is of finance as a quant firm. Does everyone know what quant firms do? Or let me ask you guys this: is anyone in quant right now, or hedge fund, or trading? Anyone doing any of that? But you guys do personal trading, right? Personal trading, yeah, personal trading. Do you guys trade equity, commodities, options? Do you guys trade crypto? Cryptocurrency? A little bit, a little bit. If you guys have been paying attention, the American election for the past week, crypto has been very volatile, right? Basically, it's directly tied to who is going to win the election. So, and if you pay more attention, so what happened during the election this time as compared to last time was that you can actually bet on the election, right? Say Polymarket or Kalshi, even on interactive brokerage, right? You can bet on who's going to win, right? And then you can actually live see what is the payout of betting each of the two candidates, right? So that is new for this year, right? And an even more interesting thing that you guys should pay attention to is how much of an impact a celebrity who speaks out has to the result, right? And to the payout of that person. So that's something that you guys should keep in mind. So all in all, why I'm saying today's sharing is called Unlocking the Future of Finance is that the future of finance is different from finance before, right? I understand that you guys have learned about valuation, learn about profits, different types of ratios, but are those things still important in finance going forward? I'll be sharing that with you today. So a little bit of background about myself. I'm from Simon Fraser, which is in Vancouver, and I did my economics there. And then after that, I did my MBA at CUHK in Hong Kong. And so this is my background. So in Canada, I worked for a couple of years in TD Bank as a fund sales. And then I worked in investment banking in China Everbright in Hong Kong. And then after that, I founded my own firm, mostly doing mergers and acquisition and IPOs in Hong Kong. But that firm has been closed. VPark has been closed because that was open in 2017 and I closed it in 2020. It's because there were essentially no deals in Hong Kong. Even up until now, there's not a lot of deals. So that's kind of when I looked into doing quant, okay? Because quant is basically, I'm focusing on trading. So essentially, everybody wants to trade, whether the market is good or is bad, because you can long and you can short, right? But if I were to do deals at VPark, if the market is bad, there's no deals to be done, right? People would just close down businesses. Can I get a show of hands of like what your backgrounds are? Is anyone in business school? Engineering school? Okay, most of you guys are in engineering school, okay, so I get it. I'll be sharing a little bit more of finance, so more stuff from the business school side rather than the engineering school side today. A lot of people ask us what we do in quant trading. Like, what is quant trading? What is algo trading? In short, we do both, okay? But if you want to understand what our firm does, we're an algo quant firm. What we do is, you can take a look at this picture, right? So, have you guys seen this movie? It's called The Quiet Place. Yeah. So basically, it's an alien movie, right? So alien is trying to capture a human and eat them, right? So if you think of the human in that movie as prophet, we are basically the alien trying to catch it, okay? So the profits are hiding from us, from everywhere, okay? And then we are the aliens when we hear a sound or when we see something that triggers our algo, then we would capture it, okay? So that's what we're doing. So imagine our firm is not just one alien, right? Imagine our firm is like hundreds of aliens out there every day on the internet looking for profits. So that's how we make money. In a bit, I'll share to you how we actually, how well we do in our strategies. So in reality, it's more like on the right side, right? So those are us and our colleagues. Most of the time, we're communicating, as you can see at the top photo. We're looking to see like where we can capture these profits, right? So this is what I'm going to talk about today: macro, crypto, algo trading, and AI quant. Okay, I'm going to talk more on finance in the beginning, and then I'm going to shift towards cryptocurrency, and I'll tell you why it's shifted like that. We're quants, right? In many people's perspective, it's people like on the left, right? People wearing, really nice watches, suits and ties. But in reality, we're just like anyone that you would meet on the street. Like you might be able to meet a quant that like you have no idea that he's a quant because first of all he doesn't need to tell you, and a good quant working alone probably can make 20% a year, right, of APY. It's very normal, okay? So this is a definition that I have extracted from Investopedia. So quantitative analysis, using math and stats and measurements and research to understand behavior, okay? So that was not my definition. That's a definition from Investopedia. We're trying to understand behavior. That's what quant analysis is. And through my MBA, I've learned a lot about behavior. Okay, so how can behavior be quantified, right? Like, it's very difficult, right? So how we do it at TheoQuant is we look at the global liquidity, okay? What global liquidity means is the movement of assets, right? Say, is more people buying Hong Kong dollars, renminbi, US dollar, gold, or Bitcoin? Like, where is the movement of money? Is people buying shares? Is people buying commodities? Like, where is the money shifting? Because in the world, assuming there's no printing, right, of money, there's a finite amount of resources and money, right? Where is the money shifting towards, right? That's very important. That basically gives you a narrative of what people's behavior is, like what people want, right? Yeah, and through tech, we can now see that, right? So that is what's so amazing about crypto, is everything is on ledger, right? Every movement of crypto is on ledger, and you can always go back to figure out like which person or which wallet has been shifting their assets to where, okay? So going back to liquidity, okay? Liquidity is the efficiency or ease at which an asset can be converted into ready cash, okay? The most important part is at the end of that definition, without affecting its market price. Okay, so what does that mean? Okay, if you own Kobe Bryant's championship ring, right? It's worth $1 million, okay? You're probably gonna profit. I'm not talking about being profitable or not. You're probably gonna be profitable buying it at $1 million and selling it 10 years later. You'll probably make money, but it's still illiquid. That's the point I'm trying to make. It's still illiquid. Because once you sell it for 10 million, then the price is 10 million. You affected the price, right? But in NVIDIA, I think like if we, as a retail investor, however many shares we buy, we can never affect the price of NVIDIA, okay? So that's what it's meant by liquidity, okay? So these are other examples that I want you guys to look at. For the past year, that is, the price of Hang Seng Index compared to S&P, right? Bitcoin and Nikkei Index, okay? If you take a look, they are kind of all going to a similar direction, right? But if you, just not even using data analysis, right? Just taking a look, you can see S&P and gold look similar, right? Bitcoin and Nikkei looks kind of similar, right? So you can kind of see some sort of correlation between them, right? But if you think you should study further, that's on you, right? So that's what we do every day. We're looking at correlations, and we're trying to explain why. The why is the behavior science that I was talking about earlier, right? Obviously, oil and Hang Seng Index are their anomalies for their own specific reasons. Okay, so I'm going to talk a little bit more about finance. Do you guys know what PE ratio is? Show of hands. Yeah, PE ratio. Okay, so anyone who trades would probably know or have heard of PE ratio. So it's really simple. It's the price of the share divided by the earnings of the shares or the company. Okay, so if you're using the price, okay, it's price per share, right? Then it's over earnings per share, right? Or you can do market cap. Market cap is the entire stock divided by earnings of that company. You'll pretty much get the same ratio. A lot of people trade off PE ratios. After you look at this chart, you might not do that anymore, okay? So this is the historical PE ratio chart. The yellow is the earnings, okay? Green is the price, okay? So green is P, yellow is E, okay? And blue is P over E, okay? So, and the gray areas, those are the areas when there's a recession in the United States, okay? So if you look at the gray areas, you'll see that every time PE goes up, okay, earnings go down, right? Every time PE goes up, earnings go down, okay? So if you only look at the PE and trade, you can't really decide when is a good time to trade, okay? Because the PE ratio can range from 5 times to 40 times. So a lot of times traders or investors, they'll be like, oh, that's a cheap stock. It's at 20 times PE. But like, what is cheap, right? Like, you can't really explain what that actually means, right? It can go down to 5 times, or it can go up to 40 times, but it doesn't really imply on how good the market is, okay? So if you look at what people are worried about during the election in terms of traders, what traders are worried about, this is what they said. They said the election, right? Maybe there could be a recession, U.S. relationship with China, inflation, et cetera, et cetera. But 10% of people, not a lot, but that's a significant amount of people were talking about the inverted yield curve. Does anybody know what that is? Yeah. Okay. That's a very important curve, okay? So, because to be honest, there's no actual explanation, but for some reason, it's just very important. So the inverted yield curve is the 10-year Treasury yield minus the 2-year Treasury yield, okay? Supposedly, it should be negative. Okay, supposedly it should be positive, right? 10 minus 2 should be positive, because the longer you invest, you're supposed to get a better return, right? But if you look at the graph, okay, every time it dips below 0, when 10 minus 2 is below 0, right after there's a recession, right? So the gray area is the recession, okay? Every time there's a recession, okay? And if you look at what happened today, it dipped below 0, and it's crossing the 0 line again. So people are really worried about this, okay? It's very indicative. It's because it's saying that the market is being really weird. Like, money is not flowing correctly. Because supposedly you would put it in the 10-year yield, 10-year Treasury to earn the yield, right? But like, so why is it in reverse? It doesn't make sense. That's basically what it's saying, So going back to crypto, right? If you look at this slide, what I'm trying to tell you is, if you were to buy a random coin, which is called dog with hat, right? It's very popular recently. People buy meme coins. They're willing to use 690K to promote their meme coin on the Vegas sphere. Okay, if you think about it, like, that's actually a lot of money. But like, why are they willing to do that? Okay, so if you look at the picture on the left, that's when that post was made, and coincidentally, it was made on April 24th, right? So, and that is also the peak of the price of this meme coin, right? So, in crypto's term, we call this shilling, right? It means like people are pumping and then they're dumping, right? But does that actually imply on the liquidity of cryptocurrency? It doesn't, right? But a lot of people would profit through this, okay? As a person, it's really hard because it's very emotional, right? When you see a coin pumping from 10 cents all the way to $2, like it's really hard to sell it, right? Like you probably tell all your friends about it, and then you probably, and all your friends started buying it, and then like you're kind of like, oh, like should I sell now? But I just told all my friends about it, right? Like things like that happen, right? But in algo and quant trading, none of that would happen. We would have captured the earnings already and exited. To be honest, like right now, our bots are trading at our office, and to be honest, I don't really know what they're trading. I have no idea what they're buying and selling. And so next, I'm gonna start talking about cryptocurrency, okay? But before I start talking about cryptocurrency, I want you guys to have a sense of how large the market is, right? Because I feel like a lot of people don't actually know. So if we look at this graph right here, that is the price of stock market versus gold, okay? This is a very important chart, okay? So if you look at the China stock market, it's at 10 trillion. If you compare it to the United States, it's at 55 trillion. So the US stock market is 5 times bigger than the China stock market, excluding Hong Kong. But can you believe it? Like the price of gold is actually almost 2 times more than the Chinese stock market, right? Like these are things that is very important for us to understand. Like we, as a trader, you have to understand how big or how expensive things are. And how you can do that is very easy. You just compare to different things at a similar price level, okay? So I'm gonna go into a little bit more detail, right? Mac 7, the Magnificent 7, Microsoft, Apple, NVIDIA, et cetera, those are highlighted in yellow, okay? The price of silver, right, is highlighted in blue, and then we have cryptocurrency in green, okay? So a lot of people think, oh, crypto is so small, like such a small market cap. But did you know that BTC is actually double of Tesla? Yeah, you guys can Google this, it's true. Yeah, you guys are looking like you don't believe me, but I double checked when I put this on today, okay? It's true. The market cap of BTC is double of Tesla. And silver is more expensive than Google, right? So you need to understand these perspectives before you can actually trade. If we look at the pink bars, those are the largest asset managers in the world, okay? BlackRock, Vanguard, et cetera, okay? So let's look at BlackRock, okay? They have 9 trillion in AUM. Do you think they can move the Hong Kong stock market? They can, because they have 9 trillion. If they wanted to, they can. But are they gonna? They probably won't. But I'm just saying they can. But do you think they can move the US stock market? Probably not, right? Because they have 9 trillion in AUM and they have 55 trillion in the United States. So let's put that into the perspective of Bitcoin, right? Bitcoin is worth 1.2 trillion and BlackRock has 9 trillion. do you think they can move the market of Bitcoin? Right? Definitely yes, right? Definitely yes. So that's what we're seeing right now. If you look at a lot of headlines, they're always talking about BlackRock and Bitcoin, BlackRock and Bitcoin. So this is why people talk about it so much. People wouldn't be talking about BlackRock and gold, right? People are talking about BlackRock and Bitcoin. It's because of how liquid Bitcoin is, okay, and how much money BlackRock has, okay. That is why people are very interested in that relationship, okay. On the right, those are the quant firms. Quant firms are a little bit smaller. They're in terms of billions. Okay, so what I was saying earlier, I made it into a graph so that you guys can see. Bitcoin is still worth very little, okay, as compared to the entire equity, real estate, or bonds market. That's how small it is worth right now. So is there potential? You guys should try and figure it out yourself. So one of the things that I want you guys to pay attention to is the price of USD. Okay, so $1 in 1913, it's actually not that long ago. It's only 100 years ago. It's worth 3 cents today, right? And it's going to continue to happen because the United States will continue to print money. Okay, so but for if we compare it to Bitcoin, that would never happen because the number of Bitcoin in the world is finite. Bitcoin cannot be printed, right? It can be mined, but it cannot be printed, right? But we're at 90-something% right now. There's only less than 10% of Bitcoin that can be mined going forward. So if we compare US Treasuries, gold, and Bitcoin on the right, you'll see that the supply of Bitcoin is fixed, which is what I said. Does anybody know why gold is semi-fixed? Do you know why it's semi-fixed? Yeah.
I think there are some more gold down here, but it's hard to find.
Yeah, exactly. So so what governments do is like whenever they want to manipulate the price of gold, they would be able to find new gold mines for some reason, right? But like I'm sure they know where they are to begin with, right? So the government still controls the supply of gold, right? Volatility of Bitcoin is really high. Length of track record is really low. Governance is decentralized, which is the same as gold. Like you cannot control gold, right? Same as you cannot control Bitcoin. The very important 2 parts that I want you guys to focus on is how similar US Treasuries are as compared to Bitcoin in the cost of move and cost of store. They're both very low. It's essentially like money, right? Moving Bitcoin from here to say the United States would virtually cost you nothing, right? And storing it as well, because you can just store it on, you can store it on online or you can store it on a cold wallet, right? Okay, so if we look at what Nikola Tesla said, he said, if you want to understand the universe, think in terms of energy, frequency, and vibration, right? Energy, frequency, and vibration. Okay, what does that mean? Okay, let's talk about energy first, right? Energy, it's the easiest to understand. What China is racing to do is essentially they're trying to make energy as cheap as possible, right? Being able to do that, they have infinite power, right? Because energy can produce anything, right? So if you have infinite energy, that means you have infinite money. Okay, so I used the formula of what Tesla said. I combined it to an accounting formula. So the accounting formula is useful life equals to asset over depreciation. Okay, if we combine these 2 formulas, okay, then we have duration or lifespan equals to money over trade. Okay, money would be energy, right? Trade would be vibration or depreciation. Okay, it's like moving it, right? Duration or lifespan is the useful life or the frequency, like how long you can have it for, right? If we shift that formula around, you get money equals to lifespan times net trade value, okay, which is 1 minus transfer costs, okay? Which means the price of Bitcoin is infinite times 1 minus near zero. Okay, the reason it's 1 minus near zero is because transfer cost is near zero. Okay, so the potential is infinite. Doesn't mean the price is infinite right now, but the potential of Bitcoin being costing infinite, the potential is there. But at CUHK, we're not just buying Bitcoin and holding, right? That's not what we're doing. But Bitcoin is the backbone of why the cryptocurrency market works. Okay. So previously I was explaining to you how it works and why it's sustainable. Okay. Not financial advice, not asking you guys to buy Bitcoin. Okay. But if we look at the annual rate of return of these assets, Bitcoin definitely does better. Okay. But doing better doesn't mean everything. Okay. So there's two things that we look at as traders, as quant traders. The APY, okay, which is the return per year, and the maximum drawdown, okay, MDD. Maximum drawdown means within 1 year, how low it went down to, okay. So if an asset's max drawdown is at 99%, but it goes up to like 1,000%, I probably won't invest in it because maximum it can go down to 99, right? So on the right we have the max drawdown, okay. Max drawdown of Bitcoin is at 64. Max drawdown of silver is at 52. Okay, so a really simple comparison, you probably don't want to buy silver, right? It can drop 52% and goes up by 2. S&P is a pretty good choice, right? It goes up 13%, and the drawdown is at 24%. So usually we use S&P as a benchmark. If you beat S&P in drawdown or in return, then you're a pretty good fund, okay? Funds are trying to beat S&Ps every day, okay? So back to Bitcoin. The upside is there, 55%, okay? But the max drawdown is too large. Like we can't run a company having a max drawdown of 64%, okay? Back to my question. Max drawdown is at 64. Upside is at 55. So what can we do to minimize the drawdown, right? Before I tell you that, we need to understand what is trading, right? Basically in trading, we use these terms very often, alpha and beta. Okay, alpha is basically how much more you can earn as compared to S&P. We always use S&P as benchmark, okay? Alpha is if you make more than S&P, then that's basically alpha. Okay. For beta, I'll have to have Jim Simons to explain it to you. Okay. So beta is the stock market as a whole. Okay. If you invest in S&P, then you're at 100 beta. Okay. Alpha is the orthogonal to beta. Okay. Orthogonal means either up or down. Okay. So if you have positive alpha, that means you're profiting. Okay, if you have negative alpha, that means you're losing money. Okay, so he said something that's very interesting, which I want you guys to think about. He said it doesn't matter where the stock market, which is the beta, is going for the medallion fund, which is his fund. Okay, it is going at 90% alpha. Okay, so it doesn't matter where beta is. He's making at least 90% a year. That's what he's telling you guys, okay? Okay, you know it's true because of the next thing that he said, right? The medallion fund is only available to employees of the hedge fund, right? He doesn't even open it up to other people, okay? And that's how good it is. Two more definitions I need to explain to you guys, which is algo, okay, and quant. Okay, so algo trading and quant trading. Algo trading means a bot is trading. Okay, so it's the alien that I showed you. That's algo. Okay, quant trading is when you use math and stats to trade. Okay, so they're not. You don't compare algo or quant. Okay, they both can exist at the same time. okay? Algo is just using bots, okay? Quant is using math and stats. Okay, so we've all seen this chart before, and we've all traded in every single point of this chart, right? We have hope, optimism, euphoria, and then we've all of us have bought, you know, some kind of stock at the tip, and then we don't sell it, right? We panic, we get angry, and then for some reason when we sell it, okay, and then it goes back up, right? It always happens, right? So the reason of that is it's the psychology of the market cycle, right? So, and this is what I mean by it's very important to study behavior of people when you trade, right? And liquidity would help you study that, okay? And the most important thing is in quant and algo trading, we remove all that psychological effect. So that is the formula of how quant funds work. Okay, so it sounds very simple, okay, but the difficult part of running a quant firm is there are many different strategies, okay, fundamental, technical, et cetera, right? Different people like to use different methods to trade, okay? For example, story, right? When a company has a good story, some people would like to buy, okay? And then what we call is that sentiment analysis, okay? Technical or momentum, we're looking at patterns, prices, we're looking at buying signals, and the strength of people buying a stock or a cryptocurrency. So that is liquidity, okay? So in our firm, what we do is we look at, we have bots to look at all of these trading strategies, and then every day we adjust and see, you know, which one strategy should we use more. Okay, we never use one strategy only. Okay, we look at which one we should use more. Okay, so I was telling you about our firm earlier, and this is actually the result of our firm. Okay, so from March we were doing really well, and then it went down. That's when I was trying to tell you guys. And then it was down for a little bit, but it went back up. And for the past 2 weeks, we were doing very well. So what I want you to focus on in this graph is our max drawdown. Okay, our max drawdown is at 0, almost 0. Okay. The reason why we can do that is because we are doing arbitrage, which is what I told you guys earlier. I'll tell you more about that in the upcoming slides. Our annualized investors return, which is our ABY, is at 20. Okay, our leverage is at 1.3, and percentage of positive days is 98. It should be more now. This was a little bit older. This was in July. I think accounting for October and September, we should be doing a better return, and percentage of positive days should be a little bit more. Can anyone guess why there was a day that we were not making money? I think it's in June. So what happened was, I think you guys will remember if I tell you, I think Microsoft got hacked or something that day, and then it was the Microsoft blue screen thing. Yeah. So on that day, our bot just stopped, right? And then we lost 0.003 because we were paying fees, but we weren't trading. Yeah. So that's why we lost 0.003%. Yeah, so I'm gonna just really quickly go through this because that's another topic for another day. But so how we maintain our maximum drawdown so low is we don't leverage a lot, as I showed you guys earlier. We're only at 1.3%, 1.3 times leverage. We only trade top 50 digital assets, okay? And and we trade on 10 exchanges, okay? So some people trade on 1 or 2, but we trade on 10. And we have team in New York, as you saw earlier in the team. We have people in New York, and we have people in Hong Kong. The reason of that is because we can monitor it 24/7. So these are the platforms that we use. We have contracts with OKX, Binance, Deribit, etc. And then we use AWS mainly for our cybersecurity. And we also use custodian. So Matrixport is a custodian where we put our funds in. That way it's an additional layer of security. We're working with CFAR. We won a couple of competitions in Hong Kong as well. AI and quant. So is AI really the solution to everything, especially in quant, right? Because you would probably have to assume in quant, AI would help at least, right? So let's take a look at that. Okay, so before we look at how AI and quant relate, let's just look at AI in general, right? So if we look at the chart in the left, you look at that biggest circle in yellow and in red. These are the global M&As by sector, right? Everything is related to energy and technology, right? And the reason of that is because AI needs to use a lot of energy, right? And tech is how it scales, okay? So in simple terms, that's exactly why, right? If we look at what CEOs are talking about on the right side, let's see, the keyword growth is US residential race, green energy outrage, okay? But the keywords that not a lot of people are talking about, which is on the left, is AI application and how it's applicable, right? Conversational AI, predictive maintenance, process automation, digital twin. These are things that we would focus on. To quantify how much of an impact AI has on the stock market, okay, because we're traders, so we look at it in terms of stock market. The easiest way was an analysis that we've done in-house, okay? So we looked at when ChatGPT was first launched in November 2022, and then we looked at how it affects the prices of Google, Meta, Microsoft, et cetera, right? When it launched, right after it launched, Google, Microsoft, Meta, Amazon, they increased their layoffs, okay, by a lot. They laid off a lot of people, okay? And some firms did not really lay off people, okay? So, why did they do that? Does it mean that when ChatGPT comes out, like, they don't need as much people immediately? That might not be the case, right? If we look at their prices, okay, so these are their prices. The companies that did the layoffs are in green, okay? The companies that did not do the layoffs are in red, okay? So if you look at their price charts, all the companies that did layoffs, their stocks went up, okay? All the companies that did not do their layoffs, their prices went either down or sideways, okay? So that is the impact of AI. When people hear AI, that's just how they feel, okay? So does AI actually have a positive impact on their P&L? Not immediately, right? But this goes back to what I was saying right in the beginning, right? It's very emotional. Like when we trade, people are being more emotional than like look at value. And for us to capture these kind of trades, we don't have to do it as a person, right? We can use our bots to do it. Okay, so that's our return so far. So you guys probably know this better than I do, so I'm not gonna go into too much details. We can use unsupervised learning to learn about clustering people, okay? And then analyzing their behavior. So what we're studying right now is that we're clustering long-term holders, mid-term holders, and short-term holders, okay? So if you think about it, right, long-term holders means that they are less prone to drawdown, right? Short-term investors means they're more prone. If it drops a little bit, they need to sell it, right? Because they're short-term investors, right? So with those trades, we know technically how long they would hold the stock or the coin, right? So if you know they're willing to hold it for longer, then we know that how far the stock can actually decrease before someone sells a lot of it. Okay, so again, being able to identify if an investor is a long-term investor, mid-term, or a short-term investor, you can almost predict how the price will be in the next minute. Okay, it doesn't need to be long, it just needs to be the next minute. Okay, so that's what I was saying earlier. Okay, and we're not trying to create a crystal ball. We're not trying to like predict what would happen. But as long as I have enough signals telling me that, oh, right now most of the investors are long-term investors, right? Then we know that the price would most likely go up. Okay, if there is not enough signal that there is long-term investors, okay, that is our end flag, okay? Notice it's not up flag versus down flag. I'm not trying to predict when it would go down in price. I'm trying to predict when the data is exhausted. That's when I would sell. It might keep going up, but I would not have enough data for me to continue to hold, right? So if we are going to be okay with creating this strategy, we think our return can go up to 80%, but our drawdown is actually going to be worse, right? To give you guys a little bit more of the industry as a whole in Hong Kong, these are all the firms, you can take a picture if you want, these are all the firms in Hong Kong that has virtual asset license, okay? And they would probably be hiring as well if you're interested in cryptocurrency or quant trading. And the good thing about working for a firm that is licensed is that you know that they're approved by the government, okay? That's very important. And second is that they can actually fundraise in Hong Kong, right? Some other firms, they're not allowed to fundraise in Hong Kong. They would have to fundraise in, say, like Cayman Island or Bermuda, some other offshore companies. But these are the ones that they are allowed to fundraise in Hong Kong. On top of that, of course, you can go to bigger banks. They are starting to hire people to look into cryptocurrencies. Even though I know you've heard that JP Morgan probably is not interested in investing in crypto, but I know as a fact that they are themselves looking into investing into crypto, but their clients do not invest in crypto. So I'll talk a little bit more about the career of quant trading. I'm sure this is the part that you guys are interested in. The good thing about quant trading is that if you look at the middle, 35% of the growth will be originated from APAC. So a lot of hiring would happen within Asia as compared to the States. That's because, to be honest, the salary in the States is just too expensive, and their quality might not actually be as good. Just like a sharing that I want to tell you guys. One of my colleagues, he graduated from Columbia FinTech Masters, right, recently. And he was telling me that the smartest, I'm not making this up, okay? The smartest students were actually from CUHK. bachelor. Yeah. So he's saying that like the guys in the States, they're not very smart. Yeah. I'm just quoting from what he told me. Okay, I'm not making this up. So basically, if he knows that and you guys know that, that means like everyone knows that like the smart people are in Hong Kong, in Asia, right? So that's why this chart is saying that a lot of the growth is gonna be from APAC. The key players are on the left. I mean, you guys can take a picture or take a look at this, but the growth would be continuous because in the beginning of this presentation, I told you guys there's more things that you can bet on online, right? Let's say like the election, right? You can even bet on like some details of the election, right? Like which state is Trump gonna win, which state is Kamala gonna win, and more people would be interested in betting on these kind of things. And when there's more online, I would even just call it betting, right? When there's more online betting, there would be more algo and quant fund because we use stats and numbers to profit from that arbitrage. So this might be a little bit old when the election result wasn't up, but the reason why crypto bros, we call them crypto bros, which is people that are really into crypto. I'm not a crypto bro myself, but yeah, I'm just trying to tell you guys what people call them. The reason why Kamala and Trump were so interested in winning crypto bros like votes, it's because of how impactful they are in the world. Okay, a person with a high follower of crypto bros, they can really impact the prices of things. If we want to learn more about crypto, X, which is Twitter, is probably the best place to go. YouTube and Telegram after that. Okay, so if you want to learn more about cryptocurrency, I urge you to just start an account on Twitter, and then you'll be able to see a lot of news that you don't see anywhere else. It's essentially how Twitter is structured, right? It's basically people are just typing in there, and it takes seconds for them to type an opinion, right? Once an opinion goes viral, it can take a couple minutes, right? Depending on who's talking about it, and these opinions are fast, right? In a fast-moving world that we live in right now, speed is always key. Okay, so who should you follow, right? Like, what are you looking for, even if you have an X account, right? So it's all in relative, right? A lot of these handles are anonymous, okay? Anonymous meaning you don't even know who that person is behind, okay? Say, for example, if you look at Elon Musk, he has 200 million followers. And this account, which is called Wall Street Silver, it has 1.4 million. And you don't even know who this person is, right? And they have 1.4 million followers. And this guy with CryptoPunk, he has 500K followers, right? So it's all in relative, right? For me, I would say 1 mil follower Twitter account is quite significant in the crypto realm, okay? 0.5 mil, it's enough for you to see if their contents are actually relevant. So my question is, why are these handles anonymous, but so many people, 1.4 million, right? Why do so many people still follow them, right? The only reason they can gain followers as anonymous accounts is when they're actually giving alpha, right? When what they're talking about actually is relevant. That's the only way, right? If they're talking about some BS every day, then there's no way as an anonymous account you can gain followers, right? Okay, so that is the value of being anonymous. That's the first thing. The second thing is a lot of these anonymous accounts, they are large crypto holders, okay? If these people get figured out who they are, which is actually on the news, a lot of people rob them because all they have to do is scan their QR code on their phone, and they can transfer like hundreds of millions away, right? A lot of people get robbed, some people get killed, these things happen, okay? So for them to be anonymous, it's actually a stamp of approval of their content. So now they're anonymous, they can actually tell you something that is valuable because you don't know who they are, right? So in the Twitter space, it's a little bit different from places like Hong Kong or China, where if you don't show your face, then you're fake, or like you're a fraud, right? In Twitter, it's a little bit different, okay? So before you go on Twitter, you have to understand the culture of how that works, okay? So do you want to take the red pill or the blue pill, right? Like, so then, you know, you can decide on your own.